The one thing that doesn't change in life is that things change, and those who don't change with the times get left behind. Okay, every year there's new cars that come out, new phones come out, houses get upgraded with new technology and security. Life insurance has also experienced a significant change. Normally, when people think about life insurance, they think two things. One, that it will replace the lost income of the untimely death of a loved one. Now, life insurance, we all understand, cannot replace the life of a loved one. However, it can help with some of the financial disparity that comes along with that. And also, it is a benefit that can be passed down to heirs and beneficiaries. Okay. Now, because of the way life insurance is categorized under the tax code, it is a benefit that is also tax free. Okay. Another thing that a lot of people don't know about is that, well, more recently, one of the upgrades that have been added to life insurance is living benefits, okay, which are also tax free since it is categorized as a life insurance policy. All right, and today I'm going to get into three of those benefits. First of which is access to cash accumulation. Next is the long-term care rider. And finally, access as a retirement fund. Okay, access to cash accumulation is accomplished in two ways. First is the lump sum contribution. If you have money from a 401k, you can roll it over, or if you have money saved up in your savings account, or whatever the case may be. If you roll over a lump sum into your life insurance policy, you will have access to a large amount of money almost immediately. On the other hand, the second method is through monthly contributions to your premium. However, this does take 5 or more years to build up before you have access to any of those funds. All right. The second method or the second benefit is the long-term care rider. So if an individual, due to illness or disability, experiences the loss of 2 or more ADLs, which are dressing, bathing, eating, attending to the wants of nature, transferring, or walking, then he or she would get access to their life insurance policy, whether that be 100,000, a million, 2 million, whatever the case may be. Now, there are some rules and restrictions that dictate how much that money and how often that money can be accessed, but you do get access to that life insurance policy. Okay, and then third is the retirement fund benefit. Okay, money in a life insurance policy, well, most contracts today are being written with a minimum guaranteed floor of 0.75% interest. Okay, to put that into context, the national average for a savings account is 0.06. Okay, on the other hand, it does have a ceiling, usually around 15%, and this is how the insurance companies have been able to average over 9% for the past 30 years. Okay, not only that, but the funds that are not exhausted gets passed on to the beneficiary or the beneficiaries, and all this again is done tax-free. All right, so this is just the tip of the iceberg.